Good morning, ladies and gentlemen. How's everybody doing today? So, should have a pretty good morning on our hands. Hello from Miami. Good morning, Jose, Sandra, CJ, Daniel. Good morning, guys. So, uh, two, there's more than two that I'll watch throughout the day, but really just like Netflix and Qualcomm. So we'll talk, definitely touch on those, and then see what else you guys are working with this morning, and maybe touch on a few others as well. Top of the morning to you. Hopefully everybody had a good morning. You got some coffee in your system as I do. We're on our third cup, so hooray to that. All right. Kmart. Oh, yeah, it's a good one. How about Enron? No, just kidding. So we'll start here with Netflix. Netflix reports earnings. We actually watched it last night in our private group. We didn't actually, well, I guess I did trade it a little bit, but didn't really trade any of this spike. But yeah, it was interesting to watch it spike up, crash back down, come back up. Pretty wild ride. So anyways, it's ripping this morning pre-market, and it's interesting because they lowered some guidance going forward, but they did have record-breaking subscribers. So to kind of walk you guys through this a little bit, they had record-breaking subscribers. Their earnings was a miss. So the earnings report is like 50-50 right now, but they did lower guidance saying they expect some sales to decrease because it's going into the seasonality change. Pretty common, right? As the summertime comes along, more people are outside, less people watch TV, so some people cancel their subscriptions. So all in all, maybe they do lose some subscriber counts going forward into the next couple months, right? So that's kind of just it. They lowered some guidance for seasonality. They don't think they're going to have quite as many subscribers as they do right now going forward in the next quarter due to the seasonality change, et cetera, et cetera, et cetera. It's gotten multiple price target upgrades today, which makes me want to be short bias on it. So we'll watch it. We'll trade price action, but, personally, I'm going to watch it short today just because I don't ever trust analyst upgrades. We got price targets of 425, 450, 470 on earnings day after a massive sell-off buyback. So, as weird as it may sound, I'll be following this short. If it continues long, great. Maybe I'll find some opportunities to get in, but I'll be watching Netflix short today. Okay. So you might think I'm crazy, but yes, I'm gonna watch this short initially, and then see how it starts to act. If it recovers and starts becoming bullish, then sure, maybe I'll trade it long, right? So yes, we'll talk about JMIA, absolutely. Actually, I was planning on talking about that one. So yeah, we're gonna watch it right now. Netflix is coming up to its pre-market high, well, after hours high, excuse me. So definitely watch the 374 level because that is what it reached to after hours trading from the ER report. This is a really big move up pre-market. Now we know Netflix can move like crazy on earnings days, but it is towards its after hours high. This 374 mark is going to be, basically the highs it's been at recently, over the past, let's call it a month. It hit highs of 379. So we are getting up towards, seller zones in regards to where it's been channeling for the past couple months. This morning pre-market, it definitely looks strong, but just because it looks strong right now doesn't mean it has to continue moving throughout the day. Do remember, it's ran from 355 to 372 already today. So that's already a really, really big move that took place. Remember, it also went from 326 to 371 already from after hours trading till this morning. We've already moved from 326 to 371 as well. So, yeah. So we will, so again for me, wait, hold on. Mr. Bush, yeah, I would definitely make sure to log in some profits. Yeah, absolutely. Yeah, see, Maxime, I didn't actually get in on it, but I did end up seeing VIOT hit my scanner later in the day for that break. And it was just so fast, right? You had to be swing trading it to really catch it or be very quick. And I just didn't catch it, but it did work out perfect, that break up on VIOT. So congrats to catching that one as well. So again, Netflix earnings day definitely has volatility up towards the aftermarket highs, and we got price target upgrades, even though the company will price target upgrades and company lowers guidance. And so here's the thing. This is the way I see it. Actually, that'll take too long if I explain all that. But anyways, so yeah, I'm going to keep a short bias outlook on this stock until it tells me differently. And then once it keeps moving up, then maybe I'll focus on a long play throughout the day. But nonetheless, just kind of watching some key points, which is right now the after hours high. And then yesterday's high a day level, which is right about there, right? So let's go forward into Qualcomm. Just going to touch on QCOM. If you didn't see the video last night, that's okay. No big deal. Only kind of went over just a few things on it. So QCOM and Apple. So Apple and Qualcomm ends their beef and drops all litigation, and the stock exploded. You guys get the point. So this move to me is definitely getting a little bit overdone. As you can see, it's all the way up to 78.75. which pushes it into a brand new 52-week high, which pushes it all the way into, it might be all-time highs, but I haven't gone back that far. Let's see. No, not at all-time highs. We're at 78. So we're really close to probably all-time highs. This is back going like 20 some on years. Let's see. No, they hit $100 before, so not all-time highs, but they're coming up to like their 10, 15-year high here back in 2013. So definitely think a little bit of this move is overdone, which means I'm not crazily long bias on the stock. If it continues trending up, watch for some dips, but that's just it. Right now it's trending pre-market. So I think it's just interesting to put on Qualcomm after this really big move. For me personally, I'm going to be following over the next couple days, see how it reacts, see how it trades. If it starts to get some weakness, I'm sure that there's going to be some type of pullback that we can get in short bias on. Okay. Why overdone? Because the stock jumped from 58 all the way to 78 in a day's time. Most people would probably want to start selling in on some of this move. Okay. How much am I planning on trading? Where I see opportunity, I'm not sure I understand. So I guess we'll talk about trend look, and I'll touch on that in a little bit here. FULT up with earnings. I don't really trade options, so I can't give the best advice there. AVGR, have not looked at that. Personally, I think weakness in the healthcare sector is... No, I don't think it's actual weakness, personally. Again, like I said, you got the bait. Well, I guess it's possible. Probably not. You still have a lot of the baby boomer group all hitting that age, and they need more products. So I don't think it's really overdone, or I think it's just kind of a short-term sell-off. Yeah, so anyways, continue. So QCOM, not bad. Another one you guys might want to keep an eye on is JMIA. Just did a video recently on 9 IPOs I thought are performing pretty good for the year. JMIA being one of them. Thank gosh to JMIA. Actually, yesterday I hit a pretty good trade here. I'll show you. Let me see. So yeah, JMIA was actually not bad. Had a couple trades here. I ended up taking a 1,000 share scalp on it earlier in the day from 1,000, or right here about 37.39 up to 37.63, and then traded another time on it, 1,000 share position at 37.45 and sold out at 39.26. So nonetheless, two pretty decent trades on it yesterday. Then I got off and then ended up keep going. That's all good. But it's up today. Now, Anyways, what am I saying? So yeah, it's up pretty big this morning. It kind of continued going. And what you want to notice is that we're starting to get, there's sellers coming into this, right? This move here was a pennant break, but it was also accommodated by some short selling. This big squeeze was accommodated by some short selling. So we know sellers are starting to get more active in the stock, which means we can see some more short squeezes, or we can start to see selling pressure come in. Nonetheless, it is a recent IPO that ran from $18 to $43, so it is picking up in steam. So there's a lot of hype surrounding the stock right now, so I think it is a good one to keep on watch because it has been performing pretty crazy. Another one I would recommend keeping on watch here is TIGR. TIGR has had a pretty good start, not pretty good, a really good start to its its IPO date from $8 to $24. This morning, it's kind of just hanging out pre-market. It did have a pretty drastic sell-off at the end of the day yesterday. So going to continue watching this one as well for possible bullish moves until we really start to get bearish and really start pulling back. I'll stay bullish sentiment on it. So for right now, just kind of keeping an eye on TIGR, see how it starts performing in the early morning. And same thing here with JMIA. You could watch for pushes over the pre-market high, and you could watch for, little bounces off pre-market supports. But at the end of the day, a stock like this, you're going to want to, it's a recent IPO. There's a lot of hype around it. You don't want to get caught in the early morning rush. So something like this, I would primarily wait probably first 30 minutes, an hour. You can see the stock still gets pretty active even after the first 30 minutes. So don't feel that you have to be in the first 1 minute, 2 minute, 5 minute, 10 minute, 20 minute to get some money. It's been a pretty active stock, even after the morning session. It's actually picked up after the morning session. So with JMIA and TIGR, I'd probably just be a little bit patient on these and see how the morning reacts to it. Does it continue to have bullish sentiment? Is it starting to get bearish sentiment before making a decision on these recent IPO stocks? Yeah. Cool. So those are primarily the couple stocks that I will be watching today. Another thing to note is today I didn't really see anything in the penny stock land, and primarily because we're starting to get into earnings report season where we're starting to have companies reporting earnings. When that's the case, a lot of times you're going to see penny stocks slow down as well. Just happens. So if you trade penny stocks, just know you might be kind of in a little bit of a lull for the next couple months. Well, actually, we're going into the summer season, so pretty much a lull for the next 6 months or so. Till we get back into September, October area, we'll start to pick back more up in penny stocks. So they'll be a little bit more frequent. We'll still have moves there, but they're just not going to be as frequent as they, have been. So penny stocks, going to be in a lull for the next 5-6 months, especially going into the summer season, especially just starting this new earnings season. So if you do trade them, start trying to look at mid caps and or large cap trading, just so you have some more opportunity to be presented with throughout these next couple months. And that's where we're at with that. Somebody asked about the market, like so I went over this yesterday, or was it yesterday? Maybe it was yesterday, but just here's when it comes to the market, like I said. Just remember, whenever you're trying to predict the market, right? Remember, in theory, so let me explain this differently. If you are trying to predict the movement of the S&P 500, right? You're not trying to predict the movement of the S&P 500. You're trying to predict the movement of 500 companies. That's in theory what you're trying to do, right? So you're always going to hear, oh, it's impossible to time the market, or it's impossible to predict the market, which in theory is correct. But you can get a good idea as far as what might happen, right? And the reason it's hard to predict is because, you're not just analyzing one stock. You're trying to predict what's going to happen to 500 stocks to predict this one index, right? Or this one ETF. And that's why it's so challenging. When people are like, people say it's impossible to time it and predict it, which they're true. It really is incredibly hard because you're trying to, and I don't want to say predict, you're trying to build, a thesis and a theory around 500 stocks. really is what you're trying to do. So yeah, it is extremely hard to do that. So, my theory, there's a couple theories I have what's going to happen in the market. Either we do get up to these all-time highs and we just get absolutely crushed and it comes back, not like crushed, but we get up to the all-time highs here and we start to fade out, right? Or we break up over all-time highs like we did recently, right? And then we fall out again, right? Or my other theory is we go into a panic buy. We see the opposite of panic selling and we see panic buying, where people have the fear of missing out, going, the market's going to keep going, the market's going to keep going. And it does, in fact, push us over all-time highs. And then we go into sort of, we kind of continue this parabolic push that we've seen up into all-time highs. And then when everybody's going to say the market's amazing, that's when we're coming down, right? So those are really my three. And the fourth theory is we just go through a sideways consolidation and we really stay within the all-time high zone in between like the 279 level for quite some time. Like those are the four things. Now everyone's gonna be like, well, duh, the market's either gonna go higher, it's gonna go lower, but yeah, that's just what it is. So I'm not here to try and predict every single move. I'm here to make a game plans as far as what I believe can happen. And if any one of those gets set in place, then I'll trade the way I need to trade, accommodating to the market, right? So another thing you want to keep an eye on is your volatility index. For one, your volatility index right here is extremely low. Actually, I thought it was a little bit lower, whatever. But you can see volatility index is extremely low right now. So what this is telling us is that nobody is really scared that the market's coming down. There's no fear in the market, and that's just it. So right now, volatility is low. That means stocks move less. They're not going to be as aggressive moves, which means your opportunity to make money shrinks as a trader, right? Because you're not going to get as much big moves. When the market's going like this, right, when the volatility is high, you're going to see stocks swinging 5, 10, 15 points in a day, which makes it really easy for people like us to make money that are traders. But when the volatility gets a little bit lower, things become a little bit more challenging because the moves aren't going to be as big. That means you're going to have to be a little bit more accurate with entries, be quicker with taking profits, etc. You get the point. So what's my sentiment on the market? Right now, my sentiment is nobody's scared. I'm still scared. Of course, I'm still kind of nervous about the way things are, moving. We've been going good for a long time, and things will end, right? So, whether it goes up another 5 months, we're steady for another 6 months. I mean, that's fine. But long term, I mean, we have a recession coming. It's inevitable. Just remember that it's inevitable. It will happen, right? So whether or not I try and time it or that, it's going to happen. It will happen. But right now, things are actually good in a sense that the economy is performing pretty well, aside from debt levels and things like that. Which there was a really good article, man. I should get this article out to you guys. There was an article I read that was the most unpolitical, unbiased article I've ever read in how we would fix our debt problems. And it's super simple, and it's literally it's a couple things I've been saying. But anyways, there's a really good article, and if I find it next day or something, I'll post it in the video and the link in the description below. It's a really good article. But yeah, we're performing pretty well right now. Let's see. JMI is bouncing. Yeah, so on the market talk, really anything that has to do with China trade talk is just a bunch of noise and bullshit that you really shouldn't pay attention to. Like, yeah, you want to keep up on it, you keep an idea about it, but it's just a bunch of stupid news that, CNBC and blog posts and blog websites are going to talk about, constantly because people love drama, people love that sort of stuff, and that's what grabs attention. And every once in a while I read it because, it is interesting. It's kind of fun. Our two presidents still not figuring, or President of China and our president still not figuring things out. I mean, it's kind of a drama fire or fueling the fire kind of thing, and they love to spew it out like this is the reason the market's doing this and this is, it's like, no, it's just shut up already. Either figure out the deal or let us know when it's done. Until then, just keep it out of the news, right? We don't need to hear about it. That news has been since like 2016. Let's hear about something new. So anything China trade talk related, it's kind of dulled down, and the market doesn't really react the way it did back in like 2016, or well, maybe I should say like 2017. It's not really reacting the same way. That news doesn't affect the market the same way that it was back in 2017. So I've even stopped really paying attention to it. At this point, it's like, you know what, whatever. Oh, trade talks are going well. Like, no, trade talks clearly aren't because you guys can't figure it out. Now, I know it's a big thing and yada, 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 but let's just get it done. All right, let's figure it out. Okay. So anything China trade talk related, and I'm kind of like, meh, and the debt levels, things like that. That is what really is part of the underlying scare for a big market crash or big market recession. Well, there's also this, there's another gentleman that I have to, I got to, I don't know where you're going to be able to find his information, but I got to try and find this one gentleman's information because he has an interesting theory on the market. He believes we're in the end of, what did he call it? Like a super cycle. And I've explained this to a couple people before, but he believes we're in the end of what's called a super cycle, which basically means the market's going to get absolutely annihilated, like super, super annihilated, which wouldn't surprise me either. But I have to find that information. If I find it for you, maybe tomorrow I will link that in the description below. So I'll try and see if I can get that info for you guys tomorrow. That's another interesting read you guys should watch. But yeah, so enough on the market talk. Anything China trade talk related, it's kind of like meh. Anything that has to do with the underlying debt of the country is like, yeah, that's true. But then again, the US dollar is still the strongest dollar because it's a petrodollar. And really that's why we went to war in Iraq, and, that's exactly why we went to war. They probably won't teach that in the history books to our children. They'll probably say we went there because, all the, people over there were bad people and they were hurting innocent people, and which is true, portion of it, but they really won't tell the real truth, and that's we went to protect the petrodollar primarily, and oil and things like that. So I wonder if they'll teach that in school in the next coming years. Probably not. But anyways, with that being said, it is 8:57. I'm going to take a quick look at just a few stocks, whatever ones I have on there. And then, also look up Ray Dalio. Ray Dalio is really good when it comes to economics. You can learn quite a bit from him and his kind of mindset when it comes to the economic cycle, which will basically teach you guys all about debt cycles, how the system works, the grinding of the gears. Basically, when things are bad, banks cannot give out loans because they don't have as much. And then when things get good, banks are more likely to give out loans, which then means small businesses get loans, and small businesses open businesses, which drives more business. And then there's more and more money coming in, which then boosts the economy. And then when the economy starts to slow, the bank's starting to tighten up on their loans. Less people get loans, and that means less people open up businesses. When less people open up businesses, less people pay taxes, and then everything starts to slow down. And then the tightening happens, and then we go through the deflation phase. And as we go through the deflation phase and get to the end and things bottom out, banks start to open up again, and then we go through the inflation phase. So it's a big cycle. Believe me, I understand. Yeah, hurt your back. It's more or less the chair. Yeah, because I guess I could sit like this. Yeah. So, yeah. So with that being said, ladies and gentlemen, everybody have a good day. It is called deleveraging. You're right, Eric. So with that being said, guys, everybody have a great day. I know I didn't get much to look over some of your guys' stocks today. I apologize for that. Just kind of on a little bit of a ramble today. Yeah, that's basically the economic cycle in 30 seconds. It's true. So hope you guys have a great day. Thanks again for tuning in. I absolutely love coming onto YouTube because it's a little bit different, every day we get to talk about something different. You guys ask some questions. So it's always pretty fun. I like the engagement here. I do want to do a weekend stream where we kind of go over some more things when we're not so pressed on time. But there's a lot going on. We'll be actually, I think here in the next 2 weeks or so, maybe 3 weeks, I'll be launching a second business with one of my business partners, which will be really cool. We've been working on that for about a year, maybe a little over a year. But it's a complete trade analytical site where traders can track their trades. So we're getting a bunch of different brokers on board. So we're still working with some brokers, trying to get them on board and get some information for them. But we'll have a fully running trading analytical site, which hopefully in the future turns into a stock scanning site. So a lot of cool things going on. Been really busy, so I'm trying to work all this into the schedule. That's why some days I'm not on YouTube, because just a lot going on, behind the scenes of what I'm doing. But, oh, by the way, I still have like 25 monitors in my bedroom. I've been looking at them every day like I'm going to get to it. But yeah, so I don't know. Maybe next week we'll do a free monitor giveaway here on YouTube, and I'll do a stream, and then we'll kind of give away some monitors randomly. I don't know how I plan to do the giveaway. I'm really not good at giveaways, but anyways. With that being said, guys, have a good day, and I'll see you guys all not next week, tomorrow morning being Thursday. Markets close Friday, just know that, so you don't have to wake up early and do anything Friday because the markets close Friday. All right, guys, everybody take care, have a good day, and I will see you guys all tomorrow.